Property Development Corporation
Audit
board together, audit committee, Monday, March 30th at 8 a.m. Roll call. We have 4 members.
3 committee members and Mo Brown.
Down here. And proof of notice has been posted in the new business, and I'll hand this over to Caitlin to review and approve the 2025 annual report to the ADO.
Sure. As you guys know, we're required to report to the authority's budget office within 60 days of the end of our fiscal year. So that's by the end of March, we have to give them our annual report. And a big part of that is the audit that we're going to be going through here shortly, but I've also included the narrative section of the report here in your packet. And what's most important is where you see pages 12 and 13. This is our annual measurement report. And in voting to approve the report to the ABO, you'll be saying that you agree to the questions and answers on this page. So it says the board acknowledge that they read and understand the mission of the public authority. So we've restated our mission statement here. Who has the power to appoint management? The board appoints management. If the board appoints management, you have a policy you follow when appointing management of the public authority. You follow your bylaws. Briefly describe the role of the board and management in the implementation of the mission. The executive director is responsible for administration and management of the corporation's programs and policies and satisfaction of all statutory requirements. The board sets those policies and programs through majority vote of the board. And has the board acknowledged that they've read and understood the responses to each of these questions and saying yes and on March 30th.
I'd like to also mention that I'm very pleased with the membership as far as the board membership for their attendance. I serve on a lot of boards, and this board, everybody's here usually at every meeting, so it's excellent.
We do appreciate that you guys make it easy for us to have a quorum every time. I know that a lot of other agencies struggle with that.
Yeah.
Almost. It was a struggle today.
Well, we won't make note of that, Mike. We understand. You're a Yankee fan, I understand, so. Okay. So we hand it over.
We'll want the committee to vote to recommend that the board approve this report.
So moved.
Second.
Second.
All in favor?
Aye.
Any opposed? Okay.
Okay, now we're going to move on to our 2025 audit, and we have our audit team here, Keely and Mike. If you guys want to walk us through.
Sure, great. Thank you, Caitlin. Good morning, everyone. Keely Hines, partner with the Bonadeo Group. I'm joined by one of our audit seniors, Michael Tennant. And today we'll go through the results of our 12/31/2025 audit. So in your packet, you have 2 documents, the draft financial statements, and then I think Caitlin, did you put required? Yep, and then the required communication. So if you look in your packet, directly after your board member bios and appendix H, the next page is our required communication.
There you go.
All right, so as part of conducting our audit in accordance with generally accepted auditing standards and government auditing standards, we're required to communicate with this group the results of our audit. So highlighting a couple of items that are required to be touched on when performing that audit in accordance with the standards. We're noting that there were no new accounting policies or changes to existing policies. Your financial statements do include estimates. There's some estimates in your capital assets as well as the valuation of inventory. Valuation of inventory being the largest and most subject to change given the assumptions and predictions around the future events. We'll talk more about that when we get into the financial statements. We do find that the financial statement disclosures are neutral, consistent, and clear. The only difficulties that we've been running into is a little bit with the timing, and I say that we're getting through it, but hopefully you folks are not antsy for a draft any sooner, because I wanted to highlight the fact that really changes in a final trial balance was not set until March 13th. So it's remarkable that we're here with a draft that has gone through quality control review and that will issue on time. But we would not be able to do this any sooner or any faster. So We just have to continue to kind of bear that in mind in terms of the timeline. One of the things that Patty and I just talked about is that Bonadeo and Bowers shares a lot of same clients that are public authorities and are driven by these same deadlines. So we're going to actually have an off-season chat about all of our clients and just making sure that there's a timeline that meets everybody's needs, so that we're not killing Beatrice, but that we're not, stuck having a bottleneck of audits that need to be completed. So we'll continue to manage that collaboratively with them going forward. We did have one misstatement that we proposed an adjustment for. It was not a material amount, but it was large enough and it was agreed upon that we would just book that. And it was in performing a test of disbursements following year end. It was determined that it was in fact a 2025 expense. So that's your last page of the required communications is a copy of that entry. So that is reflected in the draft financial statements that we're going to go through. I'm pleased to report that there were no disagreements with management or the team at Bowers. There were no consultations with other audit or other accountants for the purpose of opinion shopping on the results of the audit, so nothing to report there. And our discussions with management during the audit process as well as off-season all occur in the normal course of our relationship and have no contingency or tie to our retention as the independent auditor. Any questions there before we get into the financials? Okay, so flipping through your packet a few pages, you will find a copy of the draft audited financial statements. So these are draft with the understanding that this group will approve these drafts today. And we will get PDFs over to Caitlin and Luke as soon as possible today so that they can file with the ABO to the 3/31 deadline. The second paragraph on page 1 of our independent audit report states that in our opinion, the financial statements referred to above present fairly in all material respects the position and activities for the year end in accordance with generally accepted accounting principles. So this is the highest level of assurance that we can provide. This is stating that based upon the results of our audit, we feel that this is a fair and accurate portrayal of the operations and position of the land bank in 12/31. As I mentioned before, we conducted the audit in accordance with generally accepted auditing standards and government auditing standards as required because you are a New York State public authority. By having us conduct and perform the audit does not reduce or eliminate management's responsibilities for the accurate and complete financial reporting, developing a sound and appropriate control environment. So it's just really important to understand that those responsibilities do not go away simply because you have an external audit, and that those requirements still exist. Page 4 through 8 is the management's discussion and analysis. That is an opportunity for Caitlin and Luke to add some commentary with regards to the results of the operations in the current year. There is a new GASB standard coming out that puts some additional parameters up around the contents and what's required in the management's discussion and analysis. We'll work with you during this off season to prep and frame that out. You guys do a decent job. I don't foresee this being, a big change for you, but just wanted to warn you that that was coming. I'm not going to focus too much on that. The Government Accounting Standards Board does require that it be included, but it's technically not audited. So again, the purpose is to highlight some comparative data and allow for management to add some commentary. So flipping over to what is our page number 9 in the packet. This is your statement of net position or your balance sheet. So this is a snapshot in time at 12/31/2025 with comparative data for 2024. So this is exactly what you have, what you owe, and the net difference at December 31st. High level, in terms of your current ratio, it has taken a hit from 2024. So you're looking at a current ratio, meaning your current assets over your current liabilities, is down to just under 4, whereas last year it was 8. Really, a lot of what's driving that is reduced cash. Yes, you have increased restricted cash, but it's correlated directly to your grant and government subsidy revenue advance and contribution revenue advances. So if you look about 3/4 of the way down, you have 2 liabilities of $478,000 and $3,000, and that's what's driving that restricted cash number. So again, really that current ratio is being impacted by the reduction in available cash, offset with increases in accrued expenses. So you have accrued expenses of about $478,000 this year, tied to a number of demos, tree removals, and things that were performed before year end that were not yet paid. Your inventory balance at fiscal year end, and back up at the top, about the 5th or 6th line down under your assets, your inventory is valued at just over $1 million in 2025, and in 2024, $585,000. Taking a look at your actual inventory was relatively consistent. You do have 838 properties versus about 800 in the prior year, and roughly a similar composition of those properties that are less than or valued at less than $151 versus over $151. So you have over 700 of your properties are valued at less than or equal to the $151. So I'm sure that Caitlin, shares that type of data and statistics with you, but I also like to kind of highlight that to understand what you do have and the impact that it has on your operations, and in terms of what's going to allow for that current ratio to go up is really for your type of operation cash, and you're going to get that unrestricted available cash through sales, which I know that you folks have been struggling with more recently. So that's really what's impacting that, and not that this is a concerning or troubling results from a financial perspective, but certainly important to keep in mind as you continue to make decisions and follow the trajectory of your operations.
Something to sell.
Page 10. This is your statement of revenues, expenses, and change in net position. So think of this as your profit and loss. So your revenues for the 12 months ending and your expenses for the 12 months ending. About 3/4 of the way down, you have a net income loss before contributions. And in 2025, you did end the year with a loss of $63,000. And last year you had a loss as well, but was really made up into a net income through different contributions that were received in the prior year. So that's the change there that happened from 2024 to 2025. So this net loss did result in a reduction in your net position. Again, some of what is driving that is you did have about a 25% reduction in sales of properties. And then in this year, unrealized loss on inventory was about between $300,000 more than in the prior year. So I'm going to pause quickly and just kind of talk to you guys about what we do for the testing of the valuation of property. So we do some testing where we look at the valuation of all properties with a value that are recorded at greater than $51,000. So we tested those for consistency with the valuation policy. We tested that the valuation on the books did not exceed fair market value, and if it did, that management was recognizing an impairment. And then we actually test for ownership of those two. So using OnGov, and then sometimes the website trails a little bit, right? So we'll get supporting documentation if the results are not considered or not consistent with OnGov, but testing the existence and ownership of those properties. We then sampled some additional properties just to get more coverage. So those were a smattering of properties that had a variety of values, anything under $51,000. And then we performed some extended procedures for any of the properties that are over $151 and just check formulas and the application of your valuation policy, just to ensure that it looks like the spreadsheet is working. So we didn't necessarily pull detail or test, but we essentially looked to see that the mechanics behind what is driving that inventory number is working effectively. And we did not have any concerns, any exceptions, or any issues with that. Any questions on that before I move ahead?
I just want to remind you guys that when we're talking about the value of the inventory on our books, we book it at the lower of cost or market. So as we're putting resources into a property over the course of the year, those often get capitalized up to a point where they exceed fair market value. And so at the end of the year, we go through an exercise to readjust, and those are the formulas that Keely's talking about, to make sure that anything that has exceeded fair market value gets written off. We book vacant lots as being worth $151 because that's our most frequent sales price for vacant lots. We do sometimes sell them for more. Anything that is listed for sale, we assume that the list price is the fair market value. Anything that's under contract, we assume that the contract price is the fair market value of the property.
And that concept is consistent with generally accepted accounting principles, with the addition of the specific components that are appropriate for the land bank. So we tested for compliance with that policy. On page 13 of the footnotes is written out, as Caitlin had explained, the inventory accounting policy, just in case you want to revisit that in terms of explaining how that is valued. And then on page 18, footnote 6, this outlines transactions with the primary government. So that's any transactions that happen between the land bank and the city of Syracuse, because the land bank is a discreetly presented component unit of the city. So the city is considered the primary government. And then footnote 8 outlines some multi-year subscription agreements, and it's specific to a cloud-based application for property management, and that explains the beginning balance and the amounts due at year end, and then provides a future maturity schedule so that you can know what's due in future years for principal as well as interest. The last couple pages of the financial statement packet, as I had mentioned to you, that the audit was conducted in accordance with government auditing standards. So that does require us to define and outline for all of you what a deficiency in internal controls are, significant deficiencies, and material weaknesses. I'm happy to report that we do not have any identified. The audit standards do require that we provide that report to you, but that is the report that you would want to receive with no issues. And there was no non-compliance that we identified as a result of our audit. And then the final page, because you guys are a public authority, we note that you are required to follow section 2925 having to do with establishing an investment policy. And nothing came to our attention that would have us believe that the corporation failed to comply or have a policy in place. And folks do an annual adoption of your policies that include an investment policy as dictated by this requirement. So overall, huge thank you again to Caitlin and Luke and Patty and her team at Bowers. Like I said, this is a really, really quick turnaround and we can do it. But really without all hands on deck, you know, it wouldn't happen this fast. So great work and appreciate everybody's efforts in getting us over the finish line.
Thank you guys. This was
Yes.
very painless for me. I don't know about you.
There was last Sunday, I think B and I were going back and forth, so trying to figure some things out. She's used to working weekends. No, thank you guys for getting this done. You know, I think the inventory impairment, I think it's a big part of what sometimes we're still figuring out our costs from 2025, and I know that pushes things back. So we'll try to just really get on top of that for next year to make sure. And actually the misstatement was related to that too. That was like a tree invoice we received in, I think, January, you know, and I think for next year, but this is a 2025 expense, you know, right on the voucher, right to start with, just so we're very clear. There's a flurry of invoices at the end of the year as we're trying to close everything up. But otherwise, yeah, everything went very smoothly. I appreciate your team. Everybody was very responsive and yeah, I'm happy with it.
Yeah, our pleasure. Thank you. Any questions?
It seems our financial outlook is predicated on us selling property, and we just have to get more properties through the legal procedures that we have to follow with the city government. So,
Indeed. I mean, I'm very impressed, and I want to say thank you to Patty and her team too for keeping track of this all year long and the incredible amount of work that Luke does. You know, it doesn't look like a whole lot, but this was, you know, thousands and thousands of transactions over the course of the year, and 6 million in and about 6 million out. So,
and we're dealing with
I'm
different
impressed.
fiscal years and all that.
Yeah.
Too, so.
And this was the worst sales revenue year that we've ever had. And yet, our net position at the end was not nearly as bad as it could have been. There were a few things that I just wanted to bring to your guys' attention about that. The city typically funds us about $750,000 a year, or they have the past few years. That was the number this year, right? 750?
Yes.
And this year, usually they disperse it in 2 disbursements, and their fiscal year is not the same as our fiscal year, so we usually get half in one year and half in the other year. This year, we got them to disperse it all up front, and we only recognize it as income as we spend it. So we hustled and spent almost all of it in that 6-month period between when their fiscal year started on July 1st and the end of ours on December 31st. So we were able to book $741,000 of income from the city in that 6-month period, plus $427,000 in the first 6 months of the year from the previous city fiscal year. So by rolling all that up earlier than we would normally book it, we made this year not look so bad. Next year is going to be a little lean because of that. We also had $139,000 that the county had granted us years and years ago for the purchase of bank-owned properties. And there was more in that account originally, but there was $139,000 left at the end that we weren't able to spend. And after a certain period of time, that becomes unrestricted. So there's $139,000 of unrestricted income that has helped us this year offset the weak sales revenue. And we've also been getting for the past several years, $200,000 a year in assistance from the LBI program that just covers general operations. You hear me talk every month about the LBI grants for demos and stabilizations. This money just offsets our payroll costs. So that $200,000 helped a lot. And then we earned about $125,000 in developers' fees for doing the other LBI projects. So all of those together really helped offset our weak sales numbers for the year. And keep us in decent shape. Next year, there's referenced in here, there was a loan guarantee that we entered into in 2016. That's $150,000 that will become unrestricted in October. So that's another little bit that'll help out. We have another 200,000 from LBI again this year.
Yep.
So we won't get to roll ahead a big chunk of money from the city again, but
And we're off to a strong start
Yes.
sales-wise this year, and we're anticipating, I think, a pretty good year.
we've already closed on $375,000 worth of sales so far this calendar year, and we have a lot of big ones under contract. So knock on wood that this year will be okay.
Well, the city will be, they're starting budget deliberations right now for the next fiscal year. So maybe we should ask for more money, especially since the report recently that came out that the city of Syracuse
We're
is.
swimming in cash.
I know.
Come on.
To the,
City in New York
To the
State.
Common Council last year, actually went in their fight with that administration. So maybe we should,
Yeah,
you know?
absolutely.
This is all Petronas bailiwick, right?
Yes.
Okay.
Right. So this committee should vote to recommend that the full board approve the audit.
Okay. I'll ask for a vote, I'll ask for a motion to accept the review, approve, and adopt the 2025 audit.
So moved.
Second?
Second.
Second, all in favor? Aye. Any opposed?
Okay,
Okay,
so you can adjourn the committee and then we'll convene the special board meeting.
okay. So, motion to adjourn the audit committee.
Second.
So, Jonathan, Michael, all in favor? Aye. Okay.
Thank
Any
you.
opposed?
Okay, and then you should have a one-pager that's a very brief agenda for your special board meeting.
Let me see that one page.
Yeah.
Okay, I'll call to order the regular meeting of the Board of Directors, Monday, March 30th, 2026 of the Greater Syracuse Property Development Corporation. Roll call, as we mentioned before, proof of notice has been posted. So new business, we review and approve the 2025 annual audit report to the ABO. Do I have a motion?
So moved.
Second?
Second.
All in favor? Aye. B, review and approve the adopt 2025 audit that we just went through.
So moved.
Michael,
Second.
second. Jonathan, all in favor? Aye. Any opposed? Okay. Motion to adjourn?
So moved.
Motion to adjourn. We're adjourned.
Okay. I also do just want to remind everyone, I sent out some calendar invites. We're going to be giving our annual report to the Common Council very soon. And then later in April, we'll be doing our annual report to the county legislature. And so we have those two in addition to your regular April board meeting.
And anybody that can attend
Yes,
would be welcome.
absolutely. Thank you, everybody.
Yeah, thanks for coming.
Thank you.
Monday morning. At least it wasn't snowing.
Good job.